With all the talk about the market crashing, there are still people needing to make moves into different neighborhoods, whether you're buying or selling. So in the last 2 decades, I've seen areas that get extremely affected by the market crashes. So today, we're going to analyze which San Jose neighborhoods will best weather any looming market changes, what neighborhoods have the most upside, and I'll reveal the #1 area I predict that will have the biggest growth potential if you're buying in San Jose today. So let's start by looking at what actually happened during the 2008 crash, because what's fascinating is how differently it impacted neighborhoods that are sometimes just a few miles apart from each other. When we analyze the data from the pre-2008 crash, we can see that neighborhoods with the top school districts only saw values drop about 15 to 25%, but areas with weaker school systems, well, those plummeted almost 50% or more in some cases. That's a massive difference that can mean hundreds of thousands of dollars in preserved equity. So let me show you a comparison chart of February 2007 versus February 2009, focusing on prices across different San Jose neighborhoods. Let's look at here at Almaden Valley, where median prices fell from just $1 million to around $865,000. That's a 15% drop. But if we look at areas in South San Jose, we see drops from $640 all the way down to $350,000. That is a 44% decline. The recovery timelines were just as dramatic. While places like Almaden Valley and West San Jose were back to their pre-crash values by 2013-2014, other neighborhoods like Evergreen and parts of East San Jose didn't fully recover until 2017, nearly a decade later. So, what protected certain neighborhoods during this time? Well, the data shows us 3 key factors. First, school district quality was by far a #1 predictor of stability. This isn't surprising because good schools create consistent demand regardless of market conditions. Second, established neighborhoods with limited new development maintained better value. Areas where builders couldn't easily add new inventory meant less supply pressure when demand dropped. Evergreen, for example, was being built out in the 2000 to 2010 timeframe, so it had a lot of inventory. And third, proximity to strong employment centers, especially tech companies that weathered the recession well, meant faster recovery times. Neighborhoods like West San Jose, within a 15-minute commute of major employers, took less of a hit and bounced back years earlier than comparable homes in less convenient locations. So the history lesson isn't just academic, it gives us a blueprint for identifying which neighborhoods are most likely to remain stable if we face market challenges in the coming years. So let's take a deep dive on some of these neighborhoods and start with Almaden Valley, what I consider the gold standard for neighborhood stability in San Jose. And the data proves it with only a 15% decline over the Great Recession market crash. Almaden is located in a tucked-away valley in South San Jose, nestled against the foothills and bordered by Quicksilver Park. It is primarily residential area with a suburban feel, beautiful views, and some of the most sought-after schools in the region. When we look at why Almaden weathered previous downturns so well, these factors stand out. First and foremost are exceptional schools. Leland High School, for example, consistently ranks among California's best, placed in the top 3% statewide. During the 2008 crash, home values in Leland's district decreased by only 15%, when many other areas in San Jose saw a 40 to 50% drop. The second factor is limited development potential. Almaden is geographically constrained by hills and parklands, which restrict new construction. And during the recovery, this meant that less new inventory came online to compete with existing homes, helping values bounce back faster. And third is the demographic profile of Almaden Valley homeowners. The median household income here is about 40% higher than the San Jose average, with 42% of residents holding advanced degrees. This led to the lower foreclosure rates during the crisis and just 2.1% foreclosures compared to 11% citywide, as homeowners generally had stronger financial positions and could weather economic challenges. Fourth, Almaden is a stable neighborhood where households plan to live a long time. Average homeowner tenure in Almaden is 11.3 years versus 7.8 years for San Jose overall. But really, most important is that homeowners stay in Almaden for 20, 30 years or more. They may move within Almaden, making that average number 11 years, but they tend to stay stay or move from one school district section to another within Almaden, making that average actually more realistically higher. Current market indicators show Almaden's continued strength. We're still seeing multiple offers on well-priced homes, with days on market averaging just 14 days compared to 20 plus in other areas. And the sales prices remain above list price, meaning homes are typically selling with multiple offers. Just last month, I saw a 4-bedroom, 3-bath home with 2,400 square feet sell for $2.1 million. That was 8% over asking with 5 competing offers. Currently, there's a beautiful 5-bedroom, 3-bath property listed at $2.4 million that already has strong interest after just one weekend of showings. Now, the stability here comes at a premium price point, of course, but for buyers focused on long-term value preservation, Almaden has consistently proven its worth through multiple market cycles. Now, let's take a focus on Cambrian. While Almaden offers excellent stability, Cambrian provides more accessible price point with many of the same benefits, making it what I call the value play with strong fundamentals. Cambrian is in southwest San Jose, bordered by Los Gatos, Campbell, and Willow Glen, and it's known for its quiet residential streets, family-friendly atmosphere, and excellent access to shopping and employment centers. Also, Cambrian has one of the lowest crime rates in San Jose, making it even more attractive. Looking at historical performance during downturns, Cambrian dropped about 25% in value during the 2008 crash, and that's definitely better than the San Jose average of 43%, though not as quite as resilient as Almaden's 15% decline. Where Cambrian really showed its strength was in recovery, reaching pre-crash values by 2014, about 2 years faster than the city average. One of the main reasons for this stability is the quality of schools. Both Union and Cambrian school districts perform well above state averages, with several schools scoring 8 out of 10 or even higher on the Great Schools ratings. Even during slower markets, homes in these top school boundaries maintain stronger demand. Homes are still selling within 2 weeks on average, and the price per square foot was held steady at over $1,000 a square foot. But homes in Cambrian's top school districts sell for approximately $150 to $200 per square foot, higher than identical homes in less desirable school areas. Now, another key advantage is Cambrian's central location. Residents enjoy easy access to Highway 85, 17, 880, putting major employers in Santa Clara, Cupertino, and even Mountain View within a reasonable commute. During economic uncertainty, this commute flexibility was even more valuable as people may need to change jobs. Cambrian hits what I call the price point sweet spot between 1.7 and 2 million. Median home prices in Cambrian are currently around 2 million, but about 20% lower than Almaden Valley, which was closer to 2.5 million. Now, this range is accessible to both ambitious first-time buyers and move-up buyers from condos or townhomes, with the average homeowner age in Cambrian of 43 versus 48 in Almaden, indicating more first-time home buyers. This broader buyer pool helps maintain demand even when certain segments of the market slow down. Current market data confirms Cambrian's ongoing resilience. Inventory levels remain below the long-term historical average. I recently worked with clients who received 4 offers on their Cambrian home, eventually selling for 6% over asking price, even in today's more challenging market. And that's kind of demand speaks volumes about Cambrian's enduring appeal. Now let's dig into West San Jose. If Almaden is all about stability and Cambrian offers strong value, West San Jose represents what I believe is a growth opportunity in today's market. Now, West San Jose is located, as the name suggests, on the western side of the city, bordering Cupertino, Saratoga, and Campbell. This location is crucial to understanding its potential because it puts residents just minutes from Apple's massive campus and the innovation corridor along Stevens Creek Boulevard. The proximity to Cupertino and Apple matters tremendously. Properties within a mile of Apple's campus have appreciated 12% faster than the San Jose average since 2017, and only decreased 17% during the Great Recession. West San Jose homes sell for 25 to 30% less than comparable properties just across the border in Cupertino, often with access to many of the same amenities and restaurants. Now, numerous infrastructure improvements are also enhancing the area's appeal. The El Paseo de Saratoga Shopping Center is undergoing a $150 million transformation into a mixed-use development. VTA transit improvements are making commutes easier, and Stevens Creek Boulevard has seen over $1.2 billion in commercial investment in the past 5 years. Now, looking at historical resilience, West San Jose recovered faster than the eastern neighborhoods after 2008, largely due to the tech expansion during the recovery years. While many neighborhoods neighborhoods and areas were still struggling in 2011 to 2012, West San Jose was already seeing price appreciation driven by Apple's growth and the spillover effect from Cupertino's increasingly unaffordable market. Current market dynamics in West San Jose remain favorable despite broader market challenges. New development is bringing fresh housing stock, which appeals to tech workers who often prefer modern finishes. Strong rental demand with vacancy rates of just 2.3% provide investment security for those looking to buy and hold, and growing commercial amenities and continuously enhancing livability. From an investment perspective, West San Jose offers several advantages. Entry-level homes start around $1.7 million, and there's also condos and townhomes to lower that access point as well. The area has shown strong price growth, averaging 8% annually over the past 5 years. Perhaps even more intriguing is that about 67% of homes were built before 1980. That offers significant renovation opportunities for buyers looking to build equity through improvements. I recently helped clients purchase a 1950s rancher for $1.67 million. It needed modern updates, but it sat on a large lot just 10 minutes from Apple. After a $150,000 renovation, comparable homes are now selling for around $1.9 to $2 million. That's the kind of potential West San Jose offers. So now that we've examined these target neighborhoods individually, let's compare them directly to what might be the right fit for your situation. Let's start with a side-by-side analysis. Now, Almaden offers the highest stability with historical volatility index of 14.2 compared to San Jose's overall index of 22.7. It comes with a premium price point, typically $1.9 million to $3 million. It represents a lower risk based on our data analysis of the Great Recession. Cambrian provides strong stability with a mid-range price point, typically $1.7 to $2.2 million, and it offers moderate growth potential with its value proposition becoming increasingly recognized. West San Jose delivers good stability with better commutes at a price point around $1.9 million or more, and what I believe is the highest potential growth due to its proximity to expanding tech companies and relative value compared to the neighboring communities of Cupertino, Saratoga, etc. Well, your investment timeline should heavily influence your decision. For short-term buyers with a 1 to 3 time frame, Almaden offers the lowest downside risk. If you might need to sell quickly due to a job relocation or other life change, this neighborhood historically experiences smaller declines during market corrections. For medium-term owners in the 3 to 7 range, Cambrian provides the best balance of stability and appreciation potential. The strong school districts provide a floor for values, while ongoing commercial development and the sweet spot price ranges allow room for growth. And now for long-term investors of 7+ years, West San Jose potentially offers the highest total return. Its convenience, coupled with proximity to expanding employment centers, positions its strong appreciation over time, especially as renovated properties capture higher values. Now, different buyers' profiles will also find different neighborhoods appealing. Families focusing on prioritizing education should consider Almaden Valley first. Its school quality is unmatched with multiple schools rating 8 out of 10 or higher. Remember, school quality accounts for 23% of home value differences between neighborhoods and remains important, even to buyers without children. Cambrian also is the great second option. Now, Valley-conscious buyers will find Cambrian offer the best price to quality ratio because you'll get excellent schools, lower crime rates, and a central location for about 20% less than Almaden Valley properties. And growth-oriented buyers should look closely at West San Jose, which represents the strongest upside opportunity. The combination of relative affordability, renovation potential, and proximity to expanding tech centers creates a compelling investment case. The beautiful thing about San Jose is that all these neighborhoods offer quality housing and good investment potential. Your personal circumstances should guide you which one makes the most sense for your situation. Just take a look at our chart of comparisons once again. Look at the amount of appreciation from pre-Great Recession in 2007 to today in 2025. Your mind will be blown with the amount of appreciation that we've seen in all of these areas highlighted, even the areas that didn't do as well during the Great Recession. Now that we've analyzed these neighborhoods thoroughly, which is your top pick? Comment below. I really want to know, and I want to hear and start a discussion about it. But I also want you to know my top pick for buyers looking to maximize their investment in today's market, and it's a specific pocket of West San Jose that I believe offers the biggest upside potential. This area has everything going for it, starting with the proximity to Apple's expanding campus, Apple's continued growth in workforce, and adding 3,000 jobs since 2019, with plans for another 2,000 by 2027. Each of these employees represents a potential buyer or renter with excellent income looking to minimize their commute times. Infrastructure improvements are also transforming the area. The city has invested millions in road improvements along Stevens Creek Boulevard. Commercial developments have brought new retail and dining options In fact, there's been a 27% increase in dining options in the past 5 years alone, and public transportation enhancements continue to make commuting easier. So the specific area I'm most excited about is bounded by Lawrence Expressway, Highway 280, and Saratoga Avenue, what you might call the Country Lane and Strawberry Park neighborhoods near Mitty High School. The pocket combines excellent accessibility with established residential streets that are progressively being revitalized. What makes this area particularly attractive is the housing stock, primarily homes built in the 50s and 60s with good bones but outdated interiors, and the average home age is 62 years, suggesting significant renovation opportunities. I've watched streets like Williams Road and Doyle Road transform dramatically as older homes receive modern updates. For maximum appreciation potential, I recommend targeting properties in the lower price range under $2 million, because this price point allows for strategic renovations that can increase value while remaining within budget of many tech professionals moving to the area. Now, my prediction is data-backed, of course. This specific pocket has outperformed the broader San Jose market by 4.7% annually over the past decade. Current price-to-income ratios suggest room for continued growth, especially as comparison shopping buyers get priced out of Cupertino and move over to West San Jose. So the San Jose market is complex and constantly evolving. While some neighborhoods will definitely weather market changes better than others, your specific situation, timeline, and goals matter most. Many buyers just get paralyzed trying to time the market perfectly. But historically, the data shows that buying in the right neighborhood is far more important than buying at the perfect moment. If you're considering to move in San Jose and want to make sure you're choosing a neighborhood that will protect your investment through any market condition, well, I can help. I've studied these neighborhoods block by block for over 20 years and have detailed data on how each area performs in different market cycles. Call or text me today for a free consultation where we'll analyze which San Jose neighborhoods align best with your budget, lifestyle needs, and investment goals. My number is on the screen now, so don't try to navigate this complex market alone. Let's develop a strategy that works specifically for you. Now that you know which San Jose neighborhoods have the most resilience and upside potential, you're probably curious to see exactly what homes in these areas look like and what you'll get for your money, right? Well, click right here to watch my video tour of a completely renovated Almaden Valley home that showcases exactly what makes this area so special. Click now to see what your future San Jose home could look like.